Jack Dorsey says hyperinflation will happen in the U.S. soon. Now, how does this guy know that? I mean, now he is CEO of two major corporations, one of which one is Twitter. He also is with CEO of Square. But, Peter Lynch makes a heck of a lot of sense when he says nobody can predict interest rates, the future direction of the economy, or the stock market. Dismiss all such forecasts and concentrate on what's actually happening to the companies in which you've invested. This is so important advice. You can spend a lot of time, waste a lot of time trying to predict the future, and it's best to just go with trend following, follow the market. The market will tell you what's going on. So let's see here with the NASDAQ strong uptrend. We're above the 200-day. The 10-day moving average is in a positive uptrend. This is a very powerful uptrend. As you can see here on the long-term chart, very powerful uptrend, breaking out to new highs. This looks like a bull market to me. Now, on the mid-caps, this is a big change now. The big caps are breaking out. You notice here with the New York Composite, it's kind of stabilizing a little bit. But if you get on down to the small caps, just like the mid caps, they're really breaking out. This is a big change, and we'll talk more about it in the video. Now here's the S&P, just like the NASDAQ, very positive uptrend. As you look here on the 35-week, we're in good shape there. We had a little bit of white space in here. We got the correction, kind of normalized things, breaking out to new highs. Very positive. Now on the aggression index, seeing much improvement there. We're in an uptrend on growth stocks. This is somewhat of a proxy for growth stocks. In other words, the consumer staples, which tend to be things like H.J. Heinz or Johnson & Johnson, that kind of stuff, that's defensive stuff. Whereas the NASDAQ, technology, growth. So when this line is going up, it's a very positive sign. Interest rates, just kind of keep an eye on them, but they're not going anywhere. We're just absolutely flat on the 10-year Treasury note. We'll talk more about interest rates also. On oil continues somewhat in an uptrend. So the price of oil is becoming inflationary. Financial stocks, along with interest rates, have somewhat stabilized in here, but continue to act well. Now on the new lows, seeing a big improvement there. We did have a couple of days where we popped over 40, but we pretty much have stabilized in here, no problem. I see no recession. The inverted yield curve tells you you're having a recession. If you go back 100 years on this thing, you're going to find that the inverted yield curve has successfully predicted just about every recession. As you can see here, recession. No inversion. We're looking good there. No recession. Sentiment, we've kind of seen a little bit of a normalization of sentiment, kind of back in neutral territory. On the put-call ratio, we continue to be in greed, but like I've said many times about sentiment, the problem with using it as an indicator, which it's a secondary indicator, these conditions can go on for a long time. Now, on the junk bonds, we're seeing a little bit of concern there. The junk bonds have been in a downturn and actually broke below. This is a ratio now where we're comparing junk bonds, high-yield bonds, to the safe Treasury bond. So when this line is going up, everybody's excited about the economy. Economy looks good. When it rolls over, kind of starts to look iffy. However, it is in an uptrend, but we did see somewhat of a breakdown this week. We'll continue to watch. This is the QQQJ, which is a growth-oriented, technology-oriented ETF. You can see here in an uptrend, however, not breaking out to new highs. Here's the volatility index, continues to improve. We're seeing a little bit of a stabilization of rate of change, but volatility is low. Now, let's talk about inflation, hyperinflation. What I've got here is the Vanguard Value ETF as a ratio of the Schwab U.S. Large Growth ETF. Now, usually, so when the ratio is going up, it's telling you that the value stocks, meaning the defensive type stuff, are outperforming. Now, during periods of hyperinflation, value stocks tend to outperform growth stocks. Now, as you can see here with this ratio, this is not the case. In fact, it's improving. So growth stocks continue to dominate this market. So I would think that if the market was discounting hyperinflation, we wouldn't be seeing a trend like this. So let's just keep going with it and look at other things. The small caps, as I pointed out to you, now here's a line here at the bottom where I'm showing relative performance of the small caps to the big caps, meaning the S&P. You can see it's been an underperformance cycle that's been going on for quite a while. However, it might be breaking out here. The actual index, or the ETF, no, it's the index, small cap index, is actually breaking out of a basing pattern. This may fail, we don't know, but small caps are starting to improve. Now, if you're going to have a recession, now let's go back and look at past recessions. And this is a S&P 500 chart on a monthly basis where I'm comparing it to the 10-month moving average. You can see here in past recessions what that looks like. We had dual recessions, between 2000 and 2016. So this has been a very difficult period. But if you look at where we are now, shoot, it kind of looks a little bit more like, like this area here, which was, 1995. This was a great market. So it's looking pretty constructive. Doesn't look like a recession to me. Now, interest rates have been dropping for a long time. This is a graph going all the way back to 1981, and this is plotting the 10-year Treasury note yield since 1981. Man, it's in a downtrend. If you're going to have hyperinflation, it would seem to me that your interest rates would be up here. Something like, substantially more, but the 10-year is currently at 1.572 and has been dropping since 1982, and I don't see any reversal of the trend. So it's just something to be aware of. All right, here's the top 5. We own this stock. It's been a good one. This is Asana. Now, we are seeing a little bit of hesitation in here around that 10-day moving average. Would hold off for now on it. I would just keep an eye on it. Here is Enphase Energy. This is one of these, renewable energy equipment. They make these battery packs. I'm hearing a lot of breakthroughs in battery technology, not just here, but in China. China has a company called CATL that seems to have a major breakthrough in battery technology. In fact, Tesla will be adopting it. But you can see here, gap up, what we would call an ascending flag formation. Keep an eye on it. Looks good. Lending Club. This is an interest rate driven situation of financial. You can see here we got the gap up, ascending flag, looks positive. Here's Cloudflare. Now we own this stock as well. This is more of a security software. It's been in a very strong uptrend for a good while. However, kind of seeing it kind of flatten out a little bit here. No problem though. Okay, last but least is Tesla. Tesla has made our list. I'll tell you a little history on Tesla. We first discovered the stock in 2012. On a split adjusted basis, it was at $6 a share. It was roughly a $6 billion company. Now the market cap is over $1 trillion, and the stock is trading at roughly 1,200. So we found it in 2012. We did sell it around 2014, but then the stock went dead for about 5 years because it was just getting its momentum going. Anyway, this is a very interesting company. Continues to look promising. If I were to buy this stock, I would want to see a basing pattern develop first. I wouldn't. It's almost like a parabolic move. But anyway, that's it. If you have any questions, please give me a call. Thank you very much.